Welcome to the Global Real Estate and Entrepreneurship Podcast. I'm so excited to kick off 2025 with a super dynamic real estate entrepreneur. Welcome, Jenny Tate, to the podcast.
Thank you, Nicole. Thank you so much for having me here and Happy New Year, everyone.
Fantastic. Jenny, you are an expert mortgage broker and you have a background in finance. Can you talk to us and tell the audience about your expertise and your career path that led you into real estate?
Yeah, so it wasn't totally smooth. I had a few career changes through the last 15 years. I actually started as chemist. I have my undergraduate, I know, in chemistry. I worked for Xerox as a product developer for 5 years. And then I understood that's not really my path. I want to interact with clients. I want to deliver direct value to people. So I went and I did my MBA at Schulich and transitioned into the finance world. So I worked for a few big financial institutions until COVID hit. And I think we kind of all started think about how the future holds for us, what's new. And I always wanted to be self-employed. Finance, it was my superpower. And I said, okay, so I cannot be a realtor because I don't know, guys, how you do that. That's not, it's not. I said, I know finance, mortgage agent, I think is that my path. So I've been a mortgage agent for a few years now. Now helped many, many clients in different situations. If it's self-employed, first-time homebuyer, investors, and it's been it wa- it's been interesting because I started brokering in a very dynamic period, I guess.
Absolutely. I mean, Jenny, that is so amazing. And this is one of the reasons why I think we connected. So, as my audience knows, I'm a former stockbroker and financial advisor. My background too, I was at IBM at one point in time. And, I've joined a very high tech social media group. And it's so interesting to me the career path that people go down that lead them to aspects of real estate. Obviously, you're a brilliant person, and
Thank
I think it is so fantastic to be connected with empowered, educated, experienced women in this field. And it just never stops to amaze me how nothing is ever lost.
you.
You're
No,
talking about being a chemist and you went to Schulich, which is a very prestigious MBA program in the Greater Toronto area out of York University.
that's
Brilliant, good on you. And then born out of the pandemic,
yes.
is you become this entrepreneur and you're doing super well. And so, talk to me about your business as an entrepreneur, as a mortgage broker, a dynamic mortgage broker, at a time when the market took off, when we really didn't think it would, but it was very strange. Real estate was in a point of major transition at that point from sort of old school brokering, hands on face to face to Zoom technology, electronic signings. And then also our market took off in the GTA. So talk to me about the trajectory of your mortgage business and finance business from that time to now.
To be honest, in the beginning it was scary because, I wasn't sure if I knew what I was doing, right? So it was booming. All the conditions of finance were kind of written off. No one wanted to put any conditions. Like you had to go very aggressive, know your craft, know your stuff,
Yeah.
and just do everything you can for your client. How was your experience?
That's interesting that you say that because during that boom time, you're right. In the Greater Toronto area, we're in constant bidding wars, especially at the beginning of the pandemic and during the pandemic. And as a mortgage broker, it's huge liability because you're trying to cover off your clients when they're not giving you the proper clauses that you need to do
E-
so. You're not getting
Exactly.
condition of finance. But then, as a realtor and working with experienced mortgage brokers such as yourself, I recognize that, like, we can't. I can't even give you the clause that you need because we can't get the house with that. So, I mean, I know with working with mortgage brokers during that time, things that I would do and we would do to cover off is I would send the mortgage brokers the property in advance.
Yes.
We would qualify them as much as possible prior to going in.
Check all the documents,
Yeah.
access
How
their
far can we
credits.
go above? I would do CMAs on every property to say, okay, it's listed at this. I expect it to go around this. If it goes 50 grand above, sort of, Jenny, where are we on this? How can we do this? If it's a condo, let's factor in the condo fees. Let's make sure the condo qualifies. Because what people don't realize a lot of time is it's not just their credit worthiness, it's the credit worthiness of the property as well.
Exactly.
And when you go in firm, what a lot of people don't realize is that, you can't get out of that. And if you can't close and something happens, you're on the hook. So, for
Exactly.
instance, like if you can't sell the property that you're in for whatever reason, or for the amount that you need, you're on the hook for the difference and all that sort of good stuff.
Yeah, so actually, my husband and me, during that period, sold and bought our primary home.
Yeah.
We were competing against, I think, 10 people. Uh, we potentially overpaid for our current home, but also, we sold, so it kind of evened out. I'm saying that just because right now the environment is so much better for buyers.
Yes. Agreed.
Right? Especially when the interest rates are going down. Like we had already five drop rates, right? In the variable, fixed is kind of static, but the variable is going down. We can put conditions on finance. We can put other conditions that the clients ask for, and it's just not to say that there is no bidding war right now, right, Nicole? But it's just kind of like gives the buyers a little bit more control.
Well, in the greater Toronto area, so let's backtrack a little. So we talk about the pandemic and everything was wild.
Yeah,
Property prices were at an all-time high. And then we got to the point where, because of inflation, the government started to increase interest rates. About what was that, about 2 years ago, two and a half,
2 years. Yep,
2 years ago? So as the interest rates went up, people's credit availability shrunk.
that's right. Yes,
Prices were still high, so we saw demand go down a little bit. And as demand went down, the property prices went down as well. So we've seen
exactly.
our on detached properties, we've seen properties, from peak go down in the Greater Toronto area like $200,000-300,000, depending on the value.
Where exactly? Yeah.
Exactly. Um, and then now you're saying five interest rate drops, and that was from like last year, but it wasn't even the beginning of last year,
No, it really was 5 months back to back.
right? It was from
Y-
about June,
Yes.
right? So in a very short period of time now, because that's what, like 6 months,
Yes.
we're seeing five interest rate drops, and the last two have been of 50 basis points.
I know it's
Quite
crazy.
significant.
Yeah. So since I started brokering, I saw the rates going up. I know. I saw market going crazy during the
Panic
comment.
depression that you seen, right?
Exactly. So it's been so much. It's been it's been a lot of fun.
Yes, it's been a roller coaster.
It's been a roller coaster.
I train agents and I talk to agents, and I've been in the business and a broker for a while. And this is something that we talk about a lot, is that you ride the waves of the market and you become good at different things at different times in the
Exactly.
market, right?
Exactly.
So now when you're in a down market, you really are managing client expectations. You're doing more marketing. You're having to deal with clients who are having trouble selling homes. Some of the issues that must have come up for you are differences in appraisals.
Yes. So
Condo market, that's been something in the Greater Toronto area that has been pardon my French, a bitch slap
it
for
was.
all the people who line up in -30 to go buy new homes and new condos and overpaid 300,000 on those. 2 years later, when they come to close, they can't close. Like, did you see that phenomenon with some of your clients?
Uh, mm, To some extent, I see a lot of pre-closures. Like I see a lot of people trying to push the units out. Actually, I have a buyer right now that we are having hard time to close because the seller is in debt.
Mm,
So we do see that. So they have their own debts. They're trying to cover their debts before we can close.
I see.
Yeah. So there is a lot of that happening right now in the market.
And we are seeing that in the greater Toronto market, like where we're seeing condos and detached houses traditionally are not on the same trajectory anyway. And something that happened
No.
in the greater Toronto area is because, um, most condos, or I think is it something like 80% of condos are not a primary residence or not owner
Well, investment properties. Yeah.
investment properties. That coupled with what was going on in the tribunal with an unfriendly and backed up landlord tenant issues, coupled with mortgages for
Affordability.
investors became very tough, especially during those years where the mortgage rates were going up.
Yeah,
And then
because they didn't cash flow. Yeah.
yeah, and then you're having, closings where, you purchased it for $1 million and now the bank is saying it's worth 800 and you've got to come up with the extra 200,000, which is a big issue. So we've got
It
so
is.
much stuff going on.
But it's actually also a great opportunity for our buyers. So I have multiple first-time home buyers who are buying those condos right now, the second hand, right? So they're coming in, they're buying a great property for reasonable prices right now. We are putting all conditions in, and the first-time home buyers are actually like accessing those condos.
Absolutely. What a great segue, Jenny, because what it's done. So, yes, property investors got hit in this crunch with what sort of happened over the last 2 years, and God bless them. I hope that they recover as much as they can and then they go on to recover more. But what a great opportunity for people who have not been in the market, new home buyers especially, to get their foot in the door. So let's talk about that. So now we fast forward. We've got interest rates that are on the decline in the last 6 months. And something interesting that's happened is not only are the interest rates come down, so the cost of borrowing, but they've also lightened up all the lending rules. It's
Yes,
warmer lending environment, meaning like they want to lend people money. And we can see that a lot with the December 15th
changes.
implementation of some key lending rules. Can you talk to us a little bit about what those lending lightning restrictions are?
Yeah, so actually a few things happen. So let's start with number one, which has quite an impact. It's the 30 years amortization on insured mortgages. So what is insured mortgage? It's basically mortgage. If before the insured mortgage we considered as under $1 million purchase price of the home of the property, right now that's actually the second change. It went to 1.5. It means that we don't need to put 20% down payment anymore. So we can put it's like 5% under $500,000 and 10% everything in between $500,000 to $1.5 million. So we are looking at approximately 9%, 8.5% if you're going all the way to 1.5. Does
Nice.
it make sense?
Need less
Yeah,
down to purchase at
exactly.
a higher price. And now the 30-year amortization, in effect, what that does is create a lower monthly payment for people. Yes?
Plus, so two things. It can create a lower monthly payment if you were planning to take, let's say, let me just give you a little bit of examples, right? So let's say you're a first-time home buyer and you're purchasing a condo for $750,000. So and you have that 10% down payment. So it basically $75,000. You need to borrow $675,000 in mortgage. So if before it was 25 years amortization and 5% interest rate, right now the interest rate is a little bit lower, but let's assume it's 5%, your monthly payment would have been 3,900.
Mm-hmm.
Now, if you're making it 30 years, your monthly payment is actually 3,600.
Okay.
So we dropped your monthly payment by $300. That's quite significant.
Yes, absolutely. And okay, so what also are you and this is putting you on the spot a little bit, but
Yeah.
so They brought a rule in many years ago now, I'd say 5 or 6 years ago, with the anticipation of interest rates going up. They made everybody is always qualifying at double the rate because the anticipation was rates were going to double, which they have. And now, as we move into a different environment where we're expecting rates to go down for a significant period of time, do you see the next move being that they're going to eliminate the double qualification?
So it's not totally double. It's basically, we call it a stress test, and it's a contract plus 2%. So basically, it's whatever the bank offers right now. Let's say 4.5% interest rate. Right now, it's a variable rate. You need to add 6.5%, and that's how we stress test our clients. That is relatively new. It's just happened around COVID time. We didn't have the stress test before. We would stress people. We would qualify people based on the contract rate. Your question is if it's going to go anytime soon. Um, I don't know. I don't know. And to be honest, I don't think so because the environment is still so
Fluid.
while yeah, it's so fluid, right? We really don't know. In between the inflation and recession and all those big buzzwords, um, I don't see them making that change just yet.
Okay, so you haven't heard word on the street is not that they're talking about changing that one. Because to me, when I see these types of lending rules change, like the one that you can put down less than 20%. Now you're saying that and this is important in the Greater Toronto area because we've had an average price on homes and detached homes over $1 million for a significant period of time. And traditionally, it was you'd have to have 20% down over $1 million. Now you're saying that you can have, as of December 15th, you can have between just under 10% to
Just under 10%.
if you want to have a high ratio up to 1.5 million in a purchase price. So we're
Yeah.
opening that up to a whole like that between 1 million and 1.5 million, that segment of homes now to a whole new set of buyers.
Yeah.
Which is an interesting change in the Greater Toronto area because we always have a significant demand in the Greater Toronto area, no matter what's going on. And we've absolutely seen a greater demand in the last couple of months as the interest rates have come down. We haven't seen the average price skyrocket just yet. So that makes it a very great time for people who want to get into a home and a detached home to make the move while interest rates and lending environment is welcoming and you can get all those conditions,
Exactly.
all those warm and fuzzy feelings. We know like home inspections and possibly not in bidding wars. And then also the price hasn't escalated yet.
Not yet.
Point where demand is going to push it because we know from supply and demand that this increased demand as interest rates go down and where there's a constant shortage in the Greater Toronto area, we will see prices go up, whether it be
Exactly.
quickly or slowly. that's the trajectory that it sort of will be heading for. Something else they've done in the Greater Toronto area that I highlighted recently with some builders is that they have created garden suites, a laneway suites. So this is basically the large lots in the Greater Toronto area and in Ontario. They're allowing you to have these basically like extra homes on them
Exactly.
because some of them can be, which I was surprised about, could be duplexes.
Two-
So instead of going out and buying another rental property or buying a rental property as an investor, you now can take your home and create, if you've got property and the area for it, you can add a duplex, another dwelling on your property. And
Yeah.
this is going to increase the value and it's going to cost you less than purchasing another home in the Greater Toronto area that could cost you somewhere between $1 million or in or around that range. So can you talk to us a little bit about the mortgage and the
Financing.
of that?
Yeah. Okay. So that's actually one of the changes that happened in the mid December as well. So the government encourages all of us to generate that extra space and affordable living that create more living how do you call it, Nicole?
Or
Uh,
affordable housing,
exactly,
rental
exactly.
units. Yeah.
Exactly. So what they basically did, they said, we can give you that. So whatever money you're going to get from the rentals, right? So for example, you put that duplex in your backyard, you're going to get, let's say, $2,000 from each unit. It's $4,000 per month. That is going to be your potential income. Now, we don't need to wait until you actually put that duplex on your at your home. They will give you that money based on your estimate income that will come once you will have it.
Wow.
So
And is
I
that
know.
full amount? Because I know at times rental income, they'd only allow you to do 50% of rental income.
So it depends. It really depends on the lender you work with. Let's say Scotia, it does the 50% offset. TD does 50% add back. You really just need to work with your mortgage agent to find the best avenue and how you can access the amount of money that you actually need. So it's never, it's sometimes 100%. Like there are lenders that will do 100%, but it really depends. Like it depends on your specific situation. So what basically it says that we are going to use your potential rental income, that $4,000 and plus your own income, and we are going to qualify you for the mortgage based on that amount. Now,
Nice.
exactly. So it basically can bump your qualification money much more, your borrowing power. So now what we're saying is that we can actually access more to up to 90% of your equity. That's totally new as well. 90%. We could never access 90%. It was always 80% up until now. So now we are using the potential earnings plus accessing up to 90%. That's
You know
Go
what's so
ahead.
interesting about this too, and it's important for baby boomers and people who are sort of
Yes,
rich and cash poor. So let's say, you're a senior and you don't have a lot of income, but you've got, your house paid off and your house is now between a million and $1.5 million, and you've got a ton of land and you're in a little bungalow, but you're not living a great life and you don't have money to qualify for a mortgage. Well, guess what? If you decide now to tap into the equity in your home, let's say grab $300,000 and put utilize the space that you have on your property, that extra income, that $4,000 that it will generate is actually going to end up helping you qualify for a line of credit or a mortgage component under
exactly.
collateral loan on your property, and then you put that in there. That creates an income stream. It increases the value of the property because now you've got two dwellings and you've got three income unit, or maybe even four if you've got a basement apartment in your actual primary unit as well. And guess
Exactly.
what? Become this big property investor by utilizing the
Your primary home.
your primary home that just sits
Yeah.
on the property. And you could probably
Yeah.
stay in your property longer. And as a senior, you could probably
Yes.
fit your property so that you're happy there and that it's safer for you, and have PSWs come in and all that sort of good stuff. So that's really very interesting that the government is allowing that. And it's a very interesting sort of proposition to utilize the properties in the Greater Toronto area and in all of Ontario. And it is all of
Yes.
Ontario, correct?
Yes, it is. And the property value just need to be under $2 million. That's the only clause. Under $2 million, which
Which is doable.
it's doable. Exactly.
Greater Toronto area that are under 2
Yeah,
million. I mean, there's so many properties that are those small bungalows, right?
exactly.
All over the GTA that were built in like the 1960s,
That
1970s.
that have a beautiful backyard.
Yeah,
Yeah.
absolutely. So
Yeah.
exciting prospect. What is your projection going into 2025 in the real estate market in the Greater Toronto area?
Nicole, just before we move there, I just want to add one more thing. So the projected or potential earnings of the basement unit is not just if you're looking to refi your home, but also if you're buying something new. So for example, yes. So if you're going and you're looking for a property that has doesn't have a finished basement,
Mhm.
right? So first of all, there is a program that calls Purchase Plus Improvement that we can access money to build that basement for you, but also we will going to stress test you, or we are going to use your income based on that potential income that you're going to get once that basement is ready.
That's fantastic. And thank you for
Yeah,
giving us that caveat because it's not just for the person who's the homeowner. You can build this into your plan as a purchase. Uh,
exactly.
so it can be for the primary resident and the basement apartment, but also an auxiliary unit like a laneway unit or a garden suite if you've got the property size for it.
Yeah.
Wow.
So, yeah. So talk to your real estate agent, talk to your mortgage agent. That's why it's important to put that finance dot, I love my spreadsheets down to figure out what's the maximum amount you can actually get approved for.
So really, if you look at a professional couple who's thinking of more of a townhome, something like this potential where you can buy up to 1.5 with less than 20 down.
Yes.
You can get a basement apartment and build that into your plan and have that part of your financing and have that potential income add to your
Yes.
credits. Um,
Exactly.
leverage from going into an $800,000 house to possibly going into a $1.2 million house. And then, of course, what I would say to someone is you're going to see the potential growth on a detached property that you're purchasing at 1.2 and have that go to 1.5. Let's say, as we see the growth in the market in the next, let's say, 5 years, which is what we have projected, really. Because once we've been there, we're gonna go back. I say we've lost 2 to 300,000 on, let's say, detached
On
homes
average.
in
Yeah.
an area. We're gonna see that come back, and we're gonna go beyond that sometime
Exactly.
5 years,
And
right?
it's even more practical sense of it. It can bring them from like a small, tiny space to the space where they can actually grow the family,
Yeah.
right? So they're upgrading their space, they're getting a better house, and they're generating income in between. So yeah,
I love that. So that's really good. That's a full circle for helping all different types of families, depending on where you are in the cycle of sort of real estate in your life. Uh,
exactly.
so let's talk about those projections.
Projections. Yeah. Okay. So I'll tell you what I think. I would love to hear also what you think. I think GTA, Toronto, the north and south, east and west. Um, I think we are entering a steady kind of period, right? The rates will go down. I don't think the prices will start jumping up significantly right now. I think it will take people some time to adjust to this new environment, just because the population is growing, especially in our area that will drive the housing market, in my opinion. But I don't see collapses happening. Like we didn't see significant drops in Toronto area. Yes, we saw kind of like maybe out at outskirts, but I think we're entering a steady market when the buyers and the sellers feel comfortable at.
Now, from an interest rate drop perspective, what do you expect the Bank of Canada to do over the next year with those? Like, are you expecting another 50% drop? Are you expecting just steady 25% drop, like quarter percent over the next, 6 months to a year?
My general recommendations right now for a client, if you would ask me 4 months ago, I would say go 3 year fixed. Right now, I kind of suggest people to look at the variable option. And I have graphs that I sent to my clients to show that in the last 20 years, variable outperformed the fixed rate up until the last few years. So I think the rate will keep dropping down. I think our economy needs that. In January, I don't think it will be 1.5. I think it will be too aggressive for us, because our banks are super conservative. I think, but we will see most probably 0.25. And from what I'm reading, until let's say spring 2025, we will see another percent of drop.
Wow. Okay.
But it's just I think we need to take that with a grain of salt because we know how everything is extremely dynamic and our government potentially will be changing. So, so yeah.
I actually look at the government changes as possibly
But
like good for our markets. I think that I agree with you that I think that we're going to see interest rates go down in 2025. I think it's inevitable for house prices to go up. I think the condo market is going to be have some issues adjusting for a period of time. So there's still value to be had there, but it'll be some time before that sort of mess going on with the condo market
yes,
sort of clears up and we see values go up again there. They're a little bit flooded with inventory right now. Um, but as far as homes and detached homes in the Greater Toronto area, I absolutely see those prices going up. I'm hoping that it's not going to go up rapidly because that's never in any heated markets. Like you said, I like people on both sides to have a very fair deal, and I don't like people feeling like they overpaid or didn't know what they were buying. I like people to be informed, and I think that's better for everybody. So I'm hoping that it's going to start to increase in a very measured way, which
yes,
I think that we have the potential to see that. With new governments coming in, I think that things that are being looked at are, the backup in the tribunal. As the backup in the tribunal has been put to rest, and we start protecting landlord and investor rights, which we must. I think we're going to see more of that investor dollar come back to the greater
coming back.
area. And as we see that, because we're going to, like you said, even though the investors are the ones are having issues right now, and we're seeing new home buyers getting in the condo market, all of that is going to settle out over the next year or two, and then it'll draw back the investors. And
Yes, exactly.
something that a conservative government is talking about at this point is having the credit bureaus affected on anyone who's not paying their rent. So that is in favor of the investor and the landlord. So that, coupled with no longer any more wait times in the tribunal for people
Actually.
paying, coupled with the threat of, just like any bill, if you don't pay your rent, you're going to affect your credit. That too is
I
going.
hope it's happening. We are landlords. We have our own investment properties, and uh, we got, I don't know if it's luck, but working with a proper real estate agent, finding the proper clients, it always worked well for us. But yeah, I hear horror, I see horror stories.
God bless you. Yes. Well, it's part, I always tell people there's no free money. So if you're a
There,
landlord
no,
for a long period of time, it's been my experience, and to see that, you can have nine great tenants and one bad penny.
yeah,
And that sometimes that's par for the course with an investment property, and you have to sort of build that into your plans as well.
yes,
20% of landlords, bottom line, got taken advantage of or got caught with tenants that, in a backed up tribunal. And that thankfully should be coming to an end in 2025. That's what I see coming to an end, and that will actually help the
investors
property
coming in.
investment and the attractiveness of property investment in 2025. So that's my prediction.
Yeah, I love that. I love your prediction, Daniel.
Thank you, Jenny, and thank you so much for your expertise today. I think this has been a sunny forecast for 2025 after some turbulent
Yes,
real estate and financial waves in our markets in the Greater Toronto Area. Slow and steady with a positive increase and good lending environments. Jenny, where can people reach out to you to see what they can qualify for their next dream home?
I am very accessible on Instagram. You will also find my phone number there, my email address, and if you have any questions, just DM me.
Wonderful. So I'm going to include Jenny Tate's information on sort of all of our YouTube stuff and when we send it out. And feel free to reach out to me, and I'm happy to warm connect you to Jenny Tate, MBA, mortgage broker, and general amazing lady and empowered professional person who can help you get into your dream home. Thank you so much, Jenny, for
Nicole, thank you.
today.
Nicole, thank you so, so much for having me. It was a pleasure.
Absolutely pleasure.